Tariffs are always and everywhere consumption taxes on individuals and households. They may be levied on foreign companies, but they will be paid by your own domestic consumers indirectly, but that is how they will be paid. Simply raising tariffs, which is a tax, to try and sort that out would be a mistake. So the idea that somehow that is unambiguously good for the U.S. economy is wrong.
How will the upcoming U.S. elections affect the economy both domestically and globally? This is the theme of our conversation with John Butler. He is the investment director at Southbank Investment Research. He spent more than 25 years on Wall Street, having served as former managing director at Deutsche Bank, Lehman Brothers, and Dresdner Bank. And he's also the former head of Treasury at Tally Money. Welcome back to the show. John, always good to see you.
Thank you, David. Always a pleasure to be here.
Let's start by talking about the evaluation of, your evaluation of the economy. It's been said that an incumbent president or an incumbent party is harder to kick out if the economy is not in a recession or not in some sort of decline. Let's evaluate that. Is that true for now?
That is one of the big rules of election predictions in the United States. That is, if the economy is at least doing okay, the incumbent party tends to have the advantage. Devil you know, sort of thinking perhaps on behalf of the electorate. But if the economy is at or near recession, that's very different. And in those situations, it's more likely than not that the incumbent loses the election. Now, there are other factors, but that one is arguably the single most consistently dominant factor when it comes to regional elections.
We haven't had a technical recession, meaning 2 quarters of consecutive GDP over the last year. However, it's really not up to the NBER to make the election decisions. It's up to the people. And so my question is, do you think the people feel that the economy is in a recession?
Well, if you take a look at available survey data, you can indeed make that case. Now, let's ask the question, to the extent the economy has been growing over the past year, how has that growth been distributed? Who has it benefited most? And what you find is that employment growth has been much higher in the public sector than in the private sector. And that shouldn't be terribly surprising because the US has been running an unusually large deficit over the last couple of years, notwithstanding the economy not being in recession. And that deficit is it's government spending. So that's where the hiring has largely been. If you look at the private sector alone, full-time private sector employment is actually down over the past year. Not by a lot, but it's down. And when you put that alongside a workforce that has been growing, that implies that the unemployment rate for full-time workers has been ticking higher. Now, that is not going to sit well with a lot of voters. They're going to feel that. They're going to know someone, perhaps, who is not fully employed, or if they are fully employed, they're looking at perhaps a diminishing sense of job security. So the distribution of growth has not been particularly healthy in the U.S. And as we know, the one percenters, if you want to call them that, have also benefited disproportionately from all the growth that the U.S. economy has generated post-2008.
Speaking of the labor market, the big news item of the week regarding the labor market is that the U.S. job openings declined to the lowest level since January 2021. Vacancies fell to 7.67 million in July, below all estimates and consensus expectations. Layoffs rose to 1.76 million, the highest level since March 2023. And this is further raising the chance of a Fed cut by September, if that's not already fully priced in. John, whoever takes the White House in November, and we can talk about that in just a minute, but whoever takes the White House, they'll have to deal with the slowing economy. How are they going to turn this around, you think?
Well, they might do what the incoming Labour government has done here in the UK, which is to admit that the economy isn't great, and of course to blame it wholesale on the prior government and blame them for everything. I mean, at least that's the way it's playing out here so far. And one could imagine a similar thing happening in the event that Trump wins. Now, of course, if Harris wins, it's hard to do that because, of course, she is part of the current administration. So she can't. It's going to be hard for her to blame Uncle Joe, seeing as how she was vice president when Uncle Joe was president. So, but if Trump comes in, he may well air some dirty laundry. He may do an audit. In fact, I believe he's taken on Elon Musk's idea to do a thorough business, that is private business quality audit of all federal departments and try to show what's really going on here. Are we spending money effectively? Is it actually helping the American citizens or not? And to the extent he discovers things that are dysfunctional, then sure, he can try to blame that on the prior administration. So the blame game will almost certainly be part of what's going on here. Now, that said, you could then argue that there might be some positive policy initiatives to try and get growth going again, be it from Trump or from Harris. But let's not forget that some decades ago, an economist, William Greider, wrote a best-selling book, Secrets of the Temple: How the Federal Reserve Runs the Country. And he made the case, and this is decades ago, before activist monetary policy, before widespread bailouts, before zero interest rates, before quantitative easing. He was already making the case decades ago that the Federal Reserve, not the government, basically ran the economy. Some people would argue it almost doesn't matter what Trump does or what Harris does because the Federal Reserve is really in charge.
Before we continue with the video, I want to tell you about one of the best performing assets this year, gold. The price of gold keeps rising. It's no mystery why. The Chinese central bank is stockpiling gold in the face of deglobalization, while Chinese citizens are buying gold hand over fist to protect their wealth amidst a real estate crisis, a stock market going nowhere, and low interest rates, all seismic shifts for a country that enjoyed immense growth for 20 years. These forces are here to stay, and they're strong. They've created such momentum that gold is now attracting interest from Western investors. The chart is bullish, the arguments are many, and the move is still young. When gold rises, companies putting new gold mines into production usually rise the most. It's called leverage. West Red Lake Gold Mines, today's sponsor, is one of the few Canadian gold stocks putting a gold mine into production in this exciting gold market. The Matson Gold Mine is largely built, and West Red Lake Gold knows exactly what it needs to do and when to achieve its goal of getting this high-grade gold mine back in operation in 2025. West Red Lake Gold is a stock made for this gold market. Learn more in the link down below or scan this QR code here. Let's evaluate then Harris's and Trump's economic proposals and their plans, and maybe we can speculate as to how they may impact the economy, starting with Kamala Harris, who recently, just this week, released her economic plan. So it includes higher tax deductions for new small businesses, I believe raising from $5,000 to $50,000, 1/3 of federal contract dollars to go to small businesses. For Americans who earn $1 million plus, capital gains taxes rise from 20% to 28%. For those with $100 million of net worth and over, a minimum income tax of 25%. For new first-time home buyers, a $25,000 down payment support and a $10,000 tax credit. And of course, she's going to try to fight price gouging on grocery and food items in stores, although that particular piece of item is a little more unclear as to how they're going to do that. But anyway, what is your initial reaction to these bullet points I just read?
Well, I think this is fairly typical window dressing policy that helps perhaps to get a few votes from some marginal swing voter groups that will be important to a Harris victory. But how much of a fundamental positive difference would it make to the economy? Okay, look, tax breaks for small businesses, almost anyone in principle would support that. The problem is that it's a bit of a drop in the bucket. Historically, a lot of the jobs growth in the U.S. was generated by small businesses. That share has declined in recent decades as larger corporations, ones that have basically more stable financing options and ones who are also better positioned to lobby the government, they've taken a growing share of employment growth and economic their contribution to economic growth generally. So it's not clear how much of an impact that's going to have. What will have an unambiguously negative impact will be the tax increase on capital gains. The fact is, taxes on investment mean you get less investment. You get less investment, you get less growth. The U.S. already has a historically low savings rate. which by implication implies a historically low domestic investment rate. Now, you do have foreign investors who invest in the United States, but when it comes to domestic investment, it's a historically low rate. So the fact is, the economy's growth potential is already lower than it used to be because there's just not enough savings being invested in the U.S. economy to bump up that potential growth rate. And now, if you now increase the tax on investment even more, you're potentially going to depress the economy's potential growth rate even more. So all in, I would say that Harris's plan is a net negative for growth going forward.
What impact, if any, do higher taxes on the wealthy have on the economy? The theory, I believe, well, one of the theories is that with higher taxes on the rich, you have more spending or more available budget to spend on infrastructure spending, perhaps social security, welfare for the poor. You could perhaps invest in businesses, or you can invest in the Green New Deal if that's something they still want to pursue. And the theory is that a marginal increase in the tax on the very wealthy wouldn't hurt them as much anyway. Do you agree with that philosophy?
Well, it's not a question of whether it hurts the wealthy or doesn't hurt the wealthy. The question is, does it actually impact the economy in a positive way or in a negative way? And in my opinion, increasing the tax on investing, which reduces the expected returns on investing, means you're going to get less investing. And whether that hurts wealthy people in the process is, I mean, maybe it does, maybe it doesn't. As you say, they're wealthy, but it will reduce the amount of investment in the economy. That will reduce the potential growth rate. And if you wait 5 or 10 years, what that means is the economy will not have grown by as much as it otherwise would have done. There won't have been as many jobs created as there otherwise would have been. And what's really scary is if you somehow think the public sector can do a better job with the proceeds of those taxes than the private sector could do by itself. The fact is that, you know, the studies have been done, right? I mean, if you take a look at economies that have particularly high marginal tax rates and regress that against economies that have lower tax rates, then you adjust for certain factors like stability of the governing structure, you know, rule of law, things like this. It's pretty unambiguous that your relatively low tax countries, you know, you can take places like Singapore, for example. You can take a lot of your other Asian tigers, for example, and take a look at the past couple generations there. They soundly outperform your really heavy, high marginal tax countries. So, you know, that there it is, right? And so if you want to kill off growth, raise taxes on investment.
What do you think then of, well, not Harris's, but Biden's plan, which some speculate Harris may carry over, which is the taxes on unrealized gains for wealthy investors? Now, this has not been, you know, set in stone. It's been debated as to whether or not she will even do it. Do you think this is in the works? Do you think it's possible if Harris wins, this will be implemented? And if so, what would the impact be?
Well, look, this sort of policy is potentially even more destructive because it's an outright wealth grab. And getting the law written in a way that is not going to result in all kinds of, basically, you're going to have various entities that practically become forced sellers as a result of something like this coming in. For example, foreign investors, I mean, if they're affected by this, my God, I mean, they're going to take a look at that in the US and say, to hell with this. You know, we're going to invest in comparable companies in other jurisdictions rather than subject ourselves to that sort of tax. So if you want to crash the stock market, I mean, that's a good place to start, in my opinion. And I'm not sure that she's fully thinking that through. You know, the implications of what that would do to collateral in the banking system. It might even cause a financial crisis. So you have to be very, very careful about how that's done. It would have to be thoroughly grandfathered. But even then, of course, if it is thoroughly grandfathered, you are affecting new investment decisions, and you will get a substantially lower rate of investment in the United States if that policy goes through. And the long-term implications of that for the economy, for the health of the economy, for jobs, for everything, are extremely negative. So it might make for good. It might make for good politics, but it's absolutely devastatingly bad economics.
Well, if you were still, okay, look, you've had decades of experience actually in the investment industry. Suppose, I'm not saying it was, but suppose this were to be implemented, how would this affect capital flows? How would this affect bulge bracket bank decisions on M&A and other activities?
Well, everything would seize up, right? That is, you would have a situation where everyone fundamentally reassesses the long term expected real rates of return after tax, real rates of return on U.S. assets, and so for a period of time, almost nothing would get done. And then when the smoke cleared, people would look for whatever pockets of value began to show up. How much the stock market would have to crash for that to occur, given this new tax regime, I don't know, 20%, 30%, 50%. At some point, people start to see an opportunity to buy again, even incorporating what is now this new tax on investment. But the damage would have been done at that point. And how long it takes for that smoke to clear, I have no idea. Could be months, could be quarters, probably not years. But there would be significant economic damage as a result of all that.
Let's talk about Trump's plans, were a few bullet points of Trump's proposed economic policy, starting with his tax cuts. Now, this has been debated as to whether or not it would help the economy. There have been reports and studies done that these tax cuts would be very costly for the government, actually increasing the deficit, according to this particular study done by Penn Wharton budget model. Nonpartisan group. I'll just read you this paragraph from a CNBC article. Former President Donald Trump's economic proposals would increase federal deficits by $5.8 trillion over the next decade, almost 5 times more than those of Vice President Kamala Harris, which would add $1.2 trillion, according to this particular model. The Trump report found that his plan to permanently extend the 2017 tax cuts would add more than $4 trillion to deficits over the next 10 years. His proposal to eliminate taxes on Social Security benefits comes with a $1.2 trillion price tag, while his pledge to further reduce corporate taxes would add nearly $6 billion. I guess the assumption here is that tax cuts would bring in less revenue. What's your reaction to this?
I think they would almost certainly bring in less revenue for some period of time. What Trump's plan looks like is not terribly dissimilar from the initial Reagan plans when he was coming into office in 1980. A very traditional supply-side economic playbook, which basically forces the federal government to make do with less, pressures the federal government to not increase spending by as much, and maybe even freeze it. But what it does then do is it leaves more capital in the private sector. Now, that if you assume that the private sector would do a somewhat more efficient job allocating that capital towards people's actual needs and wants than the federal government can do, then if you wait long enough, could be a few years, then you'll see growth start to pick up again to the point where you're growing your way out of those deficits. It's a traditional supply side playbook. Now, in Reagan's case, you could say it sort of half worked. And the reason why it half worked is that there really wasn't the action taken on the spending side that there needed to be. There wasn't enough spending discipline to allow the supply side tax cut stimulus to work its magic. And that was the problem. The government kept right on growing. And so you only got it about half right. David Stockman, very well-known commentator on U.S. economics, he was Reagan's budget director. And he had a huge falling out with Reagan because Reagan promised him that what would happen on the supply side would also be the government would also have to do its job to keep costs under control, spending under control, and yet it never happened. And Stockman got, eventually leaves the White House out of frustration. So I would say the same here. I'd say Trump is sort of getting it half right so far with this plan, but half right actually isn't good enough. The U.S. doesn't really have a revenue problem. It has a spending problem. It spends more on defense than practically every other large country in the world combined. And of course, it's no longer the non-welfare state country that it was several decades ago, right? Several decades ago, you already had mature welfare states across almost all of Europe, and yet you didn't really have a big welfare state in the United States. That is not true anymore. If you take a look at the available data, the U.S. is now spending a hell of a lot on various forms of healthcare and Social Security and Medicare and other benefits and whatnot. And so the difference between the U.S. and Europe is not nearly as large as it used to be. Trump will have to come to terms with that if any sort of supply side program is going to succeed.
Well, what government programs do you think should be cut or at least less funded?
Look, I mean, obviously, that's ultimately going to be a political choice. If you leave it up to me, I would do something very, very simple. I would basically pass a law which basically said that no government program that is not sort of an infrastructure and investment program, that is any program that is strictly direct payments to recipients of various forms of government assistance, that spending cannot grow above the rate of inflation. Okay, it simply can't. And you simply pass a law, can't do it. What you then do is, and this is a bit more radical, and this is going to not go over well with some people. You literally put in place sunset provisions on major programs, and I would even put the sacred cow of Social Security in there. It might be a long sunset provision, but you basically tell people, look, in 30 years' time, it could be long, 25, 30 years' time, this program will begin winding down. And you need to know that now. And you need to start saving privately in anticipation of that very long sunset period. So you sunset a lot of these programs that have never worked as intended, have always been more expensive than intended, are inefficiently run. And everyone knows that. I mean, it's an open secret in Washington just how expensive Social Security is. And if someone came in and reformed it, it could be run in a much more efficient fashion. I forget what the actual rate of return on Social Security investments is, but it's so far below what you would simply get with a typical private portfolio of stocks and bonds. It's pretty ridiculous, really. So anyway, that's what I would do. I don't think it's going to happen. I think politically it's too difficult, but that's what I would do.
Let's take a look at Trump's plans for tariffs. Take a listen to this clip. It's 30 seconds. I'll just share with you.
A tariff is a tax on a foreign country. That's the way it is, whether you like it or not. A lot of people like to say, oh, it's a tax on us. No. It's a tax on a foreign country. It's a tax on a country that's ripping us off and stealing our jobs. And it's a tax that doesn't affect our country. And you can see hundreds of billions of dollars of tariffs on other countries also.
What's your response to that? It's a tax on foreign countries, doesn't affect us.
It's complete nonsense. Okay, it's complete nonsense. Tariffs are always and everywhere consumption taxes on individuals and households. Okay, that is what they are. Now, they may be levied on foreign companies, but they will be paid by your own domestic consumers indirectly, but that is how they will be paid. So the idea that somehow that is unambiguously good for the US economy is wrong. Now, that said, there is a case to be made that when it comes to certain industries that are considered absolutely vital to the health and security of the country, that some form of protectionism isn't necessarily a bad idea. Think defense, for example. Do you really want to outsource your defense industry because it happens to be produced cheaper by your adversaries abroad? Or what about things like agriculture? Do you really want to import all your food? Or energy? Do you really want to import all your energy? There can be a case made that when it comes to national security reasons, that tariffs can play a role in helping to shore up some domestic excess capacity that could come in handy in a rainy day, including possibly a war someday. But when it comes to just basic economics 101, the idea that you can levy tariffs and not harm your own domestic consumer standard of living, that is nonsense.
Trump has flirted with the idea at some point of supplementing tax cuts revenues or revenues lost from tax cuts with tariffs. Would that work in theory?
Well, that's a shuffling around. Okay, so what you're doing there is you're trying to maybe keep the overall implied tax burden roughly stable, but you're trying to adjust it in a way which is less likely to directly punish American workers. Now, I can see why politically that's quite popular. Economically, it's more neutral then in that sense. But really, that sort of fiddling with the tax code is something that it's a bit of a slippery slope. That is, if you're just trying to shift the tax burden around, you're likely to be creating a fair bit of economic friction in the process and uncertainty in the process. As a general rule, businesses and by extension, the economy as a whole are going to do better if taxes are relatively low, if taxes are relatively neutral, that is, they pretty much affect all economic agents more or less the same, and if they are not fiddled with and adjusted and changed frequently, because that makes it very difficult to plan for the future.
Could you make the argument, John, that tariffs are just a form of a flat tax rate? Because presumably if you implement tariffs on goods, imported goods, and those goods have to be raised in price to reflect these tariffs, well, that increase in price affects everyone equally, does it not?
The burden is going to fall heaviest on lower income groups because they spend a higher proportion of their income on consumption. And indeed, a lot of what's imported into the United States nowadays tends to be relatively mass-produced, low-margin products that are consumed by the masses disproportionately. So I would say the burden of the tariffs will fall heaviest on the poor. Now you might reply, well, hold on, there's government assistance available for them. Well, but is that really what you want? I mean, do you really want poor people to become even more dependent on the government? So look, there's no free lunch, okay? If you increase taxes, and that can be a tariff, that can be a domestic tax of some kind, if you increase taxes on something, you're going to get less of that something. If you feel that the U.S. is excessively dependent on imports, then I can see why Trump is considering fiddling around in this way. But it is a bit of a slippery slope. The better thing to do would simply make the U.S. a more attractive place to do business. And that would solve the problem that higher tariffs on imports are intended to solve.
How do we do that in principle? Make a country more attractive to do business in? I asked that as a Canadian, and I see a lot of the smart Canadian friends that I have move to the U.S. And so the question remains perennially, how do we do that?
The cost of doing business in the U.S. is far higher relative to the rest of the world today than it was several decades ago. And again, this has to do with the growth of the government, the growth of the public sector, increase in regulations, increase in red tape of all kinds. So, there's worker safety, there's environmental this, there's that, the other thing, whatever it is. And so the U.S. has come a long way in becoming a less competitive country. And you see that. You see that in the fact that the U.S. ran trade surpluses consistently until the 1970s, and those subsequently swung into deficit. And the U.S. has been running consistent trade deficits now for nearly 2 generations. I mean, that's a long time. So the U.S. has been getting gradually less and less competitive throughout. One can take a look at why. I've rattled off a few reasons why, but that's the root cause of the problem. And simply raising tariffs, which is a tax, to try and sort that out would be a mistake.
Let's take a look at some foreign policy measures now. Trump has said that the Ukraine war could spark World War III. He further argued that the messy Afghanistan withdrawal from Kabul gave Russia going into Ukraine, he said. It gave us the October 7th attack in Israel. Is he right?
I think he's being extremely simplistic. The idea that you can link the really poorly executed U.S. withdrawal from Afghanistan with Russia's invasion of Ukraine requires, it's a real stretch to do that. I think the real reason why Russia invaded Ukraine was because traditional Russian geopolitical interests were being very directly and unambiguously threatened by the U.S. and NATO. I think it's very clear that's the case. One of my foreign policy diplomatic heroes is George Kennan, who was a very senior figure at the U.S. State Department during the post-World War II era. And before that, he was the U.S. ambassador to Russia. He knew Russia inside out. And in the late 1990s, when the U.S. started to get somewhat aggressive in expanding NATO's reach across into Eastern Europe, Kennan published a warning in the New York Times. And he said very clearly, if you keep doing this, you're going to restart the Cold War, and eventually you might even start a hot war against Russia. You absolutely positively should not push NATO to Russia's borders, and absolutely not Ukraine. Now, if you look at a map, you can see why Ukraine is so important, right? Because it is the road to Moscow. If you take a look at the route the Nazis took in the Second World War, a lot of it was through Ukraine because the terrain is somewhat easier to get through, and you can also get through to Volgograd, which is extremely strategically important. So basically, the way in which to invade Russia successfully is to go through Ukraine. So if you think that Russia, under Putin or any other leader, would ever allow a foreign military alliance to push into Ukraine, you're wrong. It's not going to happen. So linking that to the Afghanistan withdrawal, I think is a very facile sort of reasoning.
Well, let's take a look at how this conflict in Ukraine could evolve. Now, you had responded to a tweet, and I'll just share my screen once more. You had responded to a tweet that said sanctions never work, highlighting an article that says EU countries import more gas from Russia than from the U.S. in the last quarter. You had responded with the following: just wait until winter. The idea that the U.S. can remain the marginal energy supplier to Europe indefinitely is laughable. It is only a matter of time before France, Germany, and others assume a more neutral posture in international politics. What do you mean by neutral posture?
I believe that a long-term consequence of this very, very heavy-handed U.S./NATO foreign policy vis-a-vis Russia and Eastern Europe, a consequence is going to be that I believe both Germany and France, and they'll probably do it together, they'll close ranks, will seek a more neutral defense and national security orientation vis-a-vis Russia. I think that is probably behind closed doors already being very seriously discussed. The fact is, both of their economies are being ruined by this conflict, which has cut off their access to cheap and affordable energy, something which is absolutely essential to their fundamental economic well-being. And they're going to have to rebuild that now. They're going to have to rebuild their economies, and that requires getting access to abundant, cheap energy. The liquefied natural gas market and the ability to supply Europe with sufficient liquefied natural gas at sufficiently low cost is simply not ever going to be as competitive as cheap pipeline gas from Russia. That is the reality. That's the geoeconomic reality. Smart French and German people know that. What they don't know is how to navigate successfully to a more neutral policy without incurring the wrath of the United States and or possibly other countries in what will be characterized as cozying up to Russia. Just because you choose to plot a neutral course doesn't mean you cozy up to Russia. Let's keep in mind, France is a nuclear power. Russia would think twice before messing with them. And if France and Germany do a deal to expand France's nuclear deterrent, and for Germany to develop a nuclear deterrent together with France, that would be an even more formidable potential opponent in the event that Russia tried to, rather than simply join forces and behave in an economic way to strengthen ties with Western Europe. But if he ever chose to do something nasty militarily, Germany and France would be more than able to defend themselves. So I think that's where the future lies. Germany going nuclear, France and Germany working together to plot a neutral course, independent of both Russia and the United States. Of course, that probably blows up NATO, but then NATO doesn't really have the same reason to exist today that it used to have anyway.
Well, why is that? Can you elaborate on that?
In the immediate aftermath of World War II, Russia occupied roughly half of Europe. That was always going to be a very difficult and adversarial situation for Western Europe, Germany itself being divided, of course, for Great Britain and for the United States. NATO was put in place to help a weak Europe defend itself against a unbelievably strong and powerful Soviet Union at the end of the Second World War. Now, once the Soviet Union blew itself up through economic mismanagement some decades later, that problem effectively was gone. And Russia was no real threat anymore. The threat, in fact, was Russian destabilization. You didn't want the Russian economy to become so weak that there was going to be another sort of communist revolution taking place. Fortunately, that did not happen. And in fact, per capita income growth in Russia has been far higher than anywhere else in Europe during the past 25 years. It's a real success story. And that economic prosperity makes Russia a potentially more stable country, a potentially easier governable country, and a potentially better partner as a country for economic trade than it was 25 years ago. Sadly, this war broke out. It didn't need to happen that way, but it did. And it's going to push back, sadly, a lot of Europe's potential economic development. They're going to suffer a hell of a lot in the meantime until they find a way to sort that out.
All right. Well, suppose Trump wins and he continues his prior policies of encouraging allies to spend more on defense, become less reliant on U.S. defense. What would that do? Would that destabilize our alliances with Europeans and thus give Putin an edge?
Well, it depends on what you mean by destabilize. If you take a look at British brand strategy vis-a-vis Europe during the era of the British Empire, I mean, the British were not simply in it. They didn't have a NATO-like structure for Western Europe, right? They opportunistically dealt with whatever European countries they thought were most important to guaranteeing their own security. And they changed alliances multiple times, depending on who they thought the more important security partners were. And they played that hand very well. Extremely well, and it helped them to build their empire without fighting major wars on the continent. The U.S. can do a similar thing today. There's no reason why the U.S. still has to have a heavy-handed foreign policy nowadays, with the Cold War long since over and Russia a far more prosperous and stable country. The fact is that the U.S. could selectively have alliances, probably with Great Britain, opportunistically with other European countries that would never need to be part of this overarching NATO. They would do so opportunistically as and when national interests aligned. That's how diplomacy works historically, and that's how it could work again. There's no reason why that would potentially be destabilizing. Now you say, yes, of course, in that situation, Europe is going to have to pay a lot more for its own defense. And so they'll start asking some very difficult questions. Gee, how do we get the most bang for our buck for defense? I've already answered the question how that's done. You go nuclear. You go nuclear.
Any significant differences between Harris and Trump in regards to foreign policy with Russia and Ukraine?
I think Harris, well, first of all, I don't think Harris considers herself much of an expert on foreign policy. And I suspect she would defer to the existing Democratic foreign policy establishment if she is elected. And so that would mean more of the same, right? It would be Biden's foreign policy team effectively still running U.S. foreign policy. And so they're the ones that got us into this situation. Would they double down? Would they give Ukraine even more deadly, longer range weapons so that they could rain it down on St. Petersburg and Moscow, bring us even closer to World War III? Maybe they're that reckless. I don't know. They're certainly being reckless now. So maybe they will just keep doubling down, tripling down until we finally do get into a situation where the world's two largest nuclear powers are playing a game of chicken. I hope it doesn't come to that. Trump appears unwilling to go down that road. He appears very willing to do a deal with Russia to settle the Ukraine situation and settle it in a way that would lead to a lasting peace. In my opinion, the simple way to do that is to allow the historically Russian-speaking, Russian Orthodox regions of Ukraine to become autonomous republics and or, should they choose, to join Russia. That said, I think in exchange for that, Trump would insist that those regions remain demilitarized in exchange for also Ukraine demilitarizing its areas near those borders after the war. So you come up with kind of a demilitarized buffer zone running through the region. I suspect that would be acceptable to Russia. I expect that would be acceptable to Trump. And obviously, it would be most acceptable of all to the poor Ukrainians who have been tragically sacrificed as a result of this great power confrontation that happens to have chosen their country as the battlefield.
Understandable. All right, so let's finish off on the election itself. The debate between Harris and Trump is set to take place next week. Any highlights you're looking forward to?
Look, I certainly hope it is entertaining. And for it to be entertaining, Kamala will actually have to talk about the issues. If it's only just, spin this and rhetoric that, it's going to be very, very uninteresting, and it's going to be just a mudslinging match. I would prefer for it to be somewhat more substantial than that. We know that Kamala has been slow to come out and talk about specific policy proposals. You mentioned a few earlier, so it's good that's at least starting. But compared to a typical presidential campaign, it's been pretty thin so far, pretty few and far between. So my hope for the debate is that Kamala does get more specific and does give people something to think about. And if Trump chooses to criticize her, well, of course, he'll have his chance. And if Trump is specific also, then Harris, she'll have her chance. That's what I'm hoping for. I'm not sure we're going to get that, however. It may be just an entertaining mudslinging fest.
We don't know who's going to win, but can we speculate as to which financial assets, whichever you choose, may do well in either situation?
Look, as I mentioned earlier, the fact that Harris is talking about either increasing the capital gains tax or even possibly introducing an unrealized capital gains tax. My God, if she truly is going to go through with either or both of those, it could crash the stock market. I don't think anything Trump is proposing would have that effect. As you've heard me say, I don't necessarily agree with all of his economic proposals, far from it. But I don't see anything in what he is proposing that could crash the stock market.
Well, just to interject there, we've seen in the past when he raised tariffs in China, the stock markets didn't like that. Would that happen? Could that happen?
I think if he did indeed come through with a big general across the board tariff increase, that would be negative. I don't believe it would be the same order of magnitude negative as what the capital gains tax increase and possible unrealized capital gains tax would do.
Okay, so any financial assets that could survive or do well in either outcome, a Trump win or Kamala Harris win?
Look, sadly, the fact that neither candidate, in my opinion, shows political willingness to seriously try to get spending under control, to me, that means the country will continue to run chronic deficits indefinitely. That is positive for precious metals, and that is positive for certain other real assets. So if you're concerned that this excessive spending problem is going to continue indefinitely, you absolutely want to have a substantial portion of precious metal and other real asset exposure in your portfolio. They are likely to outperform the general stock market in the years ahead.
Okay, very good. Well, I appreciate your thoughts, John. Where can we follow you and your work?
Well, I'm the investment director here in London at Southbank Investment Research. We have a website in front of paywall called fortuneandfreedom.com. I publish there, my colleagues publish there, and from that website, you can find your way to a lot of the other work we produce, most of which is behind paywall, but occasionally we offer some sort of special report or some such that gets pushed in front of paywall too. So that's the best place to find my work. You've also mentioned the fact that I tweet now and again, not too much. I don't clog up anyone's Twitter feed, but yes, every once in a while I can't help myself. So you can also follow my Twitter handle, Butler Gold Revo, named after my book, The Golden Revolution Revisited.
Yeah, we did speak about some themes of your book when we talked several months ago, I think last year. So I'll put the link down below. Thank you very much, John, for your time today. We'll speak again soon. Cheers.
Thank you, David. My pleasure.
And thank you for watching. Don't forget to like and subscribe and follow John in the links down below.